Yeah, I'm going to give you a couple different angles on silver, and it does relate to the overall markets. I don't think silver's going to start crashing below 21 and all this kind of garbage. I don't think that's going to happen. I mean, I think it can pull back below 26, but it's going to be some other area of the economy that's going to get nailed. And I think that that is going to be in the general stock markets. I know they're talking about the bond bubble, but I think that's a really dangerous place to be too. But any place that's been showing great performance for quite some time, like the bonds have been showing outstanding performance over the last couple years, and everybody ran out of it from the equities. But the equities aren't that bad. They recovered pretty well. I mean, I'm talking about U.S. stocks. In Europe, they're down, so maybe they might be a good place to be if you're not. Well, in other words, if you're going to buy some stocks, some of the European stocks are down so bad right now, they might not be a bad deal to get into at all. The American stocks have been staying afloat pretty long, like the Dow's up to still, it's just below 13,000. Bernanke talk didn't give any QE, so, the markets went down, the metals went down, all this kind of garbage. But the markets, the equities didn't go down that much, really. They're still pretty far up there. So it's nothing like the 2008, 2009 lows. I think this is going to be the next area that's going to crash. I know a lot of people have been saying, oh, yeah, it's going to crash, for like the last year or so. I mean, they had a lot of predictions out there in October 2011. I mean, I saw those things about maybe it'll be this October, but I don't know. I don't think it's going to be coming down the pike that long. It's not going to be that long of a wait. It's one of these deals where you really can't move in and out of the markets on a daily basis. You got to just wait, be patient, wait for some serious gains, move out, and then plan your next move. But the reason I'm saying the market's going to crash, not just because it's the only thing that's really been up and holding up pretty well. Logically, it doesn't make sense at all because the manufacturing data is down. It's been down very bad for the last several months. And also even the Baltic Dry Index. Just the Baltic Dry Index. This is shipping. This is telling you what's going on globally in shipping in the last month. It's been dropping. And these are low levels as it is. If you pull this out even further, you can look and you can see, yeah, it's been lower. But this was like, when you're looking at this trough here, like back in the February of 2012, that was the lowest it's been in 26 years. So it went up a little bit, but now it's going down again. I mean, relatively speaking, right now we're not as low as the 26-year level low, but that's bad. That's bad. That's telling you there's not much going on in the economy. The commodity prices in general are looking bad too. So, now the other thing is, this is the PMI, the global PMI off of J.P. Morgan. This is just going back a year. Now, if you look at the 5-year chart, you could see back at 2008 or 9, it even went down to like 36, 38, around that range. Now it's about 48 and a half, okay? 48.4 exactly. But that's telling you that we're in good we're going in a contraction right now. It actually needs to be a little bit above 50. Probably like 50.5 around there or so, just to break even with, because you consider inflation. But they consider 50 to be like the break-even point, where it's just there's no retraction or no growth. But right now we're in retraction. You consider inflation, it's probably even worse. And I think these numbers are rigged a little bit. They're pumped up. But I want to get back to another very alternative issue here, and that is about the drought. This is something they're not really correlating the rest of the whole picture with. And, I like thinking like this a lot better because sometimes you get a little too focused in on the charts. I mean, I like the charts especially with waves and Fibonacci. But there's something else coming up, and I'm thinking outside the box a little bit. And this drought is going to very much affect the financial world because the insurance company is going to be strained, paying out a hell of a lot of money. And even there's a lot of people without insurance that are going to get hurt very, very badly financially. And even the ones that get insurance payments to them, they're not going to be as good a position as they would have been if they had a good year. So economically, that's some serious devastation to the middle of the United States, or a good portion of the economy in the United States. Then you have to figure, it's almost like the real estate market. It's like this, you could say, well, I don't build houses, but I'm an attorney that does closings, and a lot of closings are a lot of my business. So all of a sudden your business is affected. In other words, you have a lot of businesses in the Midwest, maybe they repair machinery, supply various parts to things, or feed products, or they're selling some type of equipment or whatever. They have some kind of corollary industry related to the agriculture industry. All that's affected. In other words, agriculture is the big industry in the Midwest. So that's wiping out a lot more stuff. You just can't look at just corn. You can't just look at soy. You just can't look at even just farm products. You got to look at all those related industries. That's going to cause a lot of economic hardship all the way across the board, and this is not going away. Now, why would the stock markets aren't being affected by this yet? I swear to God, that reminds me of the problems they were having in the 20s before the stock market crashed. It's almost like it's not a perfect correlation or anything, but they had major problems in economic sectors in industry and agriculture, which we have both. And industry is showing down because not just because of that PMI index, but because the commodities are down. When you're talking like palladium and platinum is below the price of gold by this much, which is rare. That's rare to happen like that. That's telling you the industry is way down. And if there was like another explanation to say, well, South Africa had an outstanding year, they found all this platinum or whatever. No, they've had bad years. They've had a lot of strikes and power outages and things like that. They had to actually pull out of supply. They didn't actually produce enough platinum to meet demand. Now, that's a very industrial metal. It's more of an industrial metal than silver by percentage. So if that's being, held back, industry stinks. So we got problems in industry and agriculture, yet the stocks and equities are still up. Not record levels, but they're up not that far from their highs. So I'm going to say that is going to be an area to crash. That's going to be an area to crash. And it's not because I want to paint this picture of doom and gloom like the conspiracy theorists put out there, like they were all predicting. There was a lot of people predicting back in October 2011 that the stock markets were going to crash last year. I didn't believe that stuff. But I see reason for it now today, because like this drought, like I stated before, it affects agriculture, all related industries, and I picked up on my last video that it does affect the American oil industry, because the American oil industry is a different type of industry. They're using hydro water techniques to get out the oil from shale. That's going to become a lot more expensive. That's been one of the bright notes that have been going on in the United States, where they've been producing lots of natural gas and from fracking, which was using lots of water, and also lots of oil from the shale oil by using lots of water. That all of a sudden just became a hell of a lot more expensive, and the access to water is greatly diminished. So add all those things up. Why are the equity markets so high in the United States? Now, in a lot of, like I said, in Europe, they're already down almost to their 2008, 2009 lows. But in the United States, they're not too far off their highs. Doesn't make sense. That's going to be the next slaughter. Now, Bill Gross doesn't like. Bill Gross, the bond expert, whatever you want to call him, he doesn't like the equities either. But I'm looking at it from, I don't know, I think I'm saying a couple things that people aren't normally picking up on, but that's a major slice of the U.S. economy, because, Detroit is doing bad. Regular manufacturing is doing bad because they're exporting jobs to China. So we really had was The big key areas we had oil coming on very strong and natural gas. We're going to actually be the number. It's, if you don't realize, and I mentioned this before, the United States is projected to be probably the top oil producer in the world over the next several years. Probably like 20, maybe the next 4 or 5 years. We may be the top oil producer in the world. We're not going to be totally 100% independent, but we're going to probably be producing more oil than any other country. This just slowed them down, this drought. Very interesting, and I don't know if the elite did this with the weather machine or what. I don't want to get into that kind of guessing because, unless I got some kind of least something to go on that could make me think that. But I know there's people out there that get into that type of stuff. HARP is making the weather do this, and the HARP is making the weather do that. I don't know if it is, or it's probably just damn crazy earth changes going on. But I don't want to get into that stuff unless I can get a little more something substantial, concrete to go on. But considering those bright spots in the American economy were the oil, natural gas industry, and also agriculture, those industries just got clobbered pretty good due to this weather problem. So that looks very bad. And there's one little place, or there's two places, or the other place that's even doing better than the equities, the stocks, is the bond market. So be patient. They're going to get slaughtered. Silver might pull back a little bit, if there's an event. There could be the Black Swan event for terrorist attack. I don't know. The 2012 Olympics could be. I don't know. I kind of think that may occur. There might be some kind of situation where the war in the Middle East is going to start that could bring down the markets temporarily or whatever. I'm not it just smells that way. Let me put it that way. And but it's something that I can't react to on a daily basis. But I think if you're positioned in metals and you also have cash, you're both, not all metals. You got to have cash and the metals and other stocks, but not too much on the equities. I think that you're going to do great. The people that are in the bonds and the people that are in the American equities are going to get slaughtered. So just hold on, be patient, and just by process of elimination, if those areas get slaughtered, maybe silver's going to pull back even further. But that will be an absolute call for Bernanke to act. The bond markets the bonds get slaughtered, and I don't think the bonds are going to get slaughtered first. I think it's going to be the equities first. Because looking at, and I'm going to repeat it again, looking at real output, PMI stinks. The primary manufacturing index stinks. In the United States, we had some areas that pulled back a lot. The Milwaukee area went from like 60 down to 40 something. That's a major pullback. I think some of the numbers in the United States are rigged, like the Chicago area. I think that number's rigged too. I don't trust the numbers out of that area at all. And the other thing is, looking at what happened with the drought. I'm going to repeat that again. It's agriculture in every single industry that you might not even think supports agriculture. There's a lot of professional people that probably support agriculture, probably in unrelated things you don't even think about. You destroy that industry. That's the whole heart of the United States. You destroyed the total major sector of the economy. Plus, the oil industry has been greatly affected. And, it's like there's a lot more things interrelated than you think. Can't see why the equities markets are as high as they are right now. And, just looking at some of those stories coming about recently, where there's been certain stock tickers where they stopped traders from trading on, electronically, because there's been, I don't know exactly what was going on with that, but it had to do with the algorithms and all this type of stuff. It's telling me that something does not smell right with these with the stock market at all. I'm just going to state it that way. And they've been talking about this garbage, the sky is falling for years and years and years. But it looks like we got some real solid things. Manufacturing's down, agriculture is devastated in the United States, oil production in the United States is being affected. And, you know, the Baltic Dry Index, which means there's a lot less trade going on in the world, is way down. Can't see why the equities are going to stay up to where they are now. So just hang on. People in the metals are in the right place, but also be in cash too.